StockX enters the new year following a record-breaking year in 2022 as more consumers turn to the secondary market searching for products on their wish list. Here to discuss top traded brands over the past year and insights into 2023 trends, we've got StockX CEO Scott Cutler. Scott, always a pleasure to grab some of your time and speak with you, especially off of this big facts report here. First and foremost, when you think about the trends that are perhaps best slated to hold up in 2023, what comes to mind, and are you expecting any kind of brand reset in terms of affinity among consumers?
Well, it was a record year for revenue, record year for trades, record year in terms of surpassing some of the levels that were achieved, obviously, in 2020 and 2021. I think in the sneaker industry itself, what's interesting about 2022 is that the top brands remained the same. They didn't change much from 2021, but we really saw some emerging brands across lots of different categories. So a couple of examples of that: Solomon up over 2,000% year on year. Hoka as a brand also seeing great success in shoes. Uggs in shoes really seeing a real excitement in the secondary market. If you looked at apparel, another example of that, Fear of God took over Supreme for the first time in StockX history, which we were really excited about. But also other brands and accessories, for example, Swatch, thanks to its collaboration with Omega, or New Era with some of its collaborations with Murakami or Fear of God, were a couple of examples of breakout brands among hype culture that really found great excitement among consumers this year.
And Scott, stepping outside of apparel and sneakers for a second, got to go to your number one collectible here, and it's Lego. And you're saying it climbed up 2 spots on the list. Can you tell me about some of the other collectibles that you have and the interest that has been generated since the pandemic in these other categories?
The collectibles have been an exciting growth category for us for a number of years. It includes trading cards, but also it includes art and other brands, for example, Bear Brick and Cause, which have been traditionally one of the highest in collectibles. But Legos overtook them all to be the number one among top traded collectibles. And this is, again, a resurgence of a great brand, but also, again, something that in the resale market a couple of years ago we really didn't see, and it really exploded over the course of this last year.
Scott, as you're kind of monitoring the consumer environment, of course, consumers are looking at some of their discretionary spending and trying to figure out exactly which items they value most at this point in time. And this has led some companies in the discretionary category to restructure their cost basis in the meantime as well, looking at some of those margins. Is that something that StockX has had to think about, whether that be on just an expense for perhaps headcount? Has headcount reduction had to be something that StockX has had to think about as well?
So a couple of things. Clearly, the macro environment for the entire technology industry has been more challenging 22. We probably expect it to continue in 2023. That impacts everybody. Consumers overall, you have to remember that 70% of U.S. GDP is the consumer, and the consumer has faced incredible challenges over the course of last year, which has really left consumers to changing behaviors and habits, and even the amount of money that they can spend, certainly in discretionary categories. For us as a platform where we represent current culture, but we're also represent a demographic that wants access to the greatest products that are still released by brands. So even in a tough macro environment, brands are still trying to inspire consumers, and StockX has always been a platform about access and be able to access those products that you can't find anywhere else. As a company, we've, of course, had to be able to respond to a couple of different things. One, the macro environment has been challenging, but also the investor expectations for growth have changed very dramatically in a very short period of time, away from a focus of growth and much more towards sustainability, sustained profitability, which has required companies like us, as well as companies like Microsoft, Facebook, and Google, to reassess how sustainable their businesses can be with certainly a much more dovish macro environment, but also as a CEO, how you manage that across a cost base in a growing company.
This time last year, there were a lot of kind of speculation, rumors on the street that StockX might be going public. Scott, I always like to check in. What is the appetite for making a debut in the equity markets?
Well, I think it really starts first with what the investor sentiment is around growth and technology. The IPO market has been closed. But I think importantly for StockX, that's not our focus. Our focus has really been executing through this environment, focusing on the areas where we can control growth in the platform. And that's really been focusing on the international expansion of our business, which continues to grow, and to be able to focus on category expansion and creating a better product experience. And that remains our focus in this environment.
All right. Fun stuff as always. StockX CEO Scott Cutler.